Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone and welcome to the show. My name is Russel Stephenson and I'll be your host for today. Very excited actually. I've got a very interesting character in the studio with me today. He is a gentleman who was born in Sydney, grew up in Newcastle, currently living in the inner west, back in New South Wales now. He's married, 2 kids, and he has a very enviable property portfolio consisting of 18 properties and sort of valued circa around about 9.5 million. So I wanted to sort of run through the investor journey with my guest today. So Grant, welcome to the show.
Thanks, Russ. Good to be here. Long time listener, as they say.
Excellent. Look, it's great to hear that when people come in, they've been listening to the show, and it's kind of said, right, it's inspired me to get in touch and come on and share my story and share that with other investors. So yeah, look, thanks again, mate. It's great to have you here. So 18 properties over 18 years. It's been pretty full on.
Yeah, absolutely. So hasn't always been that case. We started with my wife. Our first one was back in 2001. Bought a couple of properties in that year. We then bought our principal place of residence in 2007, and then we took a big break. And we didn't start going again until around 2013.
So looking back at this first one, you've got a property here in North Bondi. Purchase price
$415,000.
Blimey. Those were the days, eh?
Who would have thought?
Yeah, absolutely.
Should have bought 3.
Yeah. Hindsight's a wonderful thing. So talk to me about how you sort of got into property investment and why property investment, and then talk to me about the Bondi area.
Sure. So it's always been an itch of mine, and I think back to when I was in my early 20s. I recall reading seminal property classic books with Jan Summers or Paul Clitheroe. So I don't know where the itch came from, but it's always been there. So, and what I like about property, it's the opportunity to if you can set yourself up to have choices.
Absolutely, like I say, you can sort of start being the maker of your own destiny once you start sort of building up that portfolio and using it as that retirement vehicle.
Yeah, I think it gives you options, and that's what we're all looking for. Options on you can choose how you spend your days.
Yeah.
And I certainly like Australian residential property as an investment vehicle, purely because of its history of long-term growth.
Yeah,
over long periods.
So how did you settle on North Bondi then? How did that come about?
Yeah, sure. I was actually living in the area.
Okay.
So it was the origins was that would be my principal place of residence.
Yeah.
I was share house living at the time, as you do. So that was the first purchase. Didn't actually move into it straight away, so I kept doing the share house thing. So I guess you could say I was an early rent investor.
Yeah.
So I rented it out for a couple of years, and then I moved in. And that was my PPOR for about 8 or so years.
Okay,
yeah.
And then use that to sort of leverage, get the second one?
Yeah, absolutely. So around the same time, my partner at the time, who is now my wife, she made a purchase as well. So she purchased a 2-bedroom apartment in Carlingford. So
okay.
we had one each. We then got married. We moved into the Bondi apartment. And as you say, then we unlocked the equity in both of those properties some 5-6 years later to buy our current principal place of residence, which is a period home in the inner west of Sydney, near the Abbotsford 5 Dock area.
Okay, excellent. So back in 2001, you picked up this property. It must be a pretty good rental yield on.
Yeah, the yield is quite low, being pure blue chip Sydney property, but because I've held that property for so long, it generates positive cash flow of about $150 a week. So,
okay. So obviously I've looked here, you've gone from sort of 2001 to 2007 where you've got your sort of 3 properties built up, and then there's a massive break until you get your sort of 4th. So talk me through what happened there. What was that period?
Yeah, life can sometimes get in the way. So during that period, so the inner west property, we put a lot of money into renovating that property, so that certainly soaked up a lot of our funds at the time.
Sure.
We then moved into that property, and then we spent the next 6 or 7 years paying down debt, building our corporate careers, and having two children as well. So the aspirations for property was always there, but it was always, it was on the back burner.
Okay, so so in terms of those sort of first three properties that you picked up initially, what were you really looking for? Were you looking for something that needed a bit of work doing to it? What was the sort of package you're after?
Yeah, good question. So what I set out to do was to build a cash flow neutral, positive portfolio that I could hold for the long term. So I was really going after high yield plays in high growth areas, and at that time the Sydney momentum was well underway. So I was lucky enough to be able to get a really high yield balanced with strong upside for growth.
Yeah, excellent. Yeah. And then, and again, looking through the portfolio, obviously, sort of, with those sort of blue chip areas, you got North Bondi in inner west of Sydney, sort of that central sort of CBD location or inner city. You've then sort of branched out here. I'm looking. Talk me through sort of Bradbury and Kingswood and where are those locations? Yeah,
so certainly. Going out on the edges of Sydney. So Kingswood is in Western Sydney. Bradbury is in the Campbelltown area, so southwest Sydney. Okay, so why did you switch from the blue chip to then going out west? What was the deciding factor for the strategy there? Yeah, sure. So what I wanted to do was to build a balanced and diversified portfolio. So I was going after the high yield, and those suburbs allowed me to have high yield, but still, as I said, upside for growth. Yeah. Okay. And when was your first? So when was the first one outside of New South Wales? So in the same year, 2013. So I did 4 properties quite quickly. I did Bradbury. I did Kingswood. I bought one in Albury as well, which is a large regional centre in New South Wales. And then the next one, I was actually there not that long ago. There you go. I travelled down. I did a road trip with the family down to Melbourne, and on the way back we stopped in Albury. Yeah, good. It's a nice spot. Yeah, it great is. RSL there. Yeah, really interesting property. It was a very cheap purchase. It was $110,000, an ex-Department of Housing product, which I then did a cosmetic renovation and added about $60,000-$70,000 value just by doing that. And was that your cheapest property in the portholio? Yeah, it was. Yeah. 110,000. How's that performed for you? Yeah, really well. So if I was to offload that today, I'd be able to sell that for $190,000. Okay, so that's pretty good going. I mean, I guess if you're listening, I think a lot of people think with property investment as well, you've got to be entering the market at 500, 600, 700,000, and how am I ever going to get on the ladder? At the same time, picking up a property, for 110. Obviously, look, we're talking only a handful of years ago, really, but there's still good opportunities out there in those areas at the lower prices. It's just really scouting them out. Yeah, I think there's a property investment strategy for everyone. So absolutely, there's opportunities out there, even for those on lower incomes that are not looking to invest as much capital. And that's why it was an interesting project to me to see if I could manufacture some equity and buy under market, conduct a quick cosmetic renovation to add some value. So it's a good example of what you can do. Absolutely. Yeah, absolutely. So you've done 15 properties in 4 years to add to your other 3 initial purchases, hence the 18 portfolio. So you've really gone nuts over the last 4 years. Yeah. The pace was on, and is that who set that pace? Did it just happen organically, or have you really pushed to go? You know what, I want 18 by this date. How did that work? Yeah, I pushed quite hard. I set myself a plan to purchase $6 million of residential investment property, and the plan would be that over time, they would obviously double, and then I'd pay down debt. And live off the rental yield. So that was the plan, and I did push quite hard, and certainly towards the end of my acquisition plan, the lending environment was starting to change and really contract and tighten up. So there was a bit of urgency, controlled urgency. Right. So you've got your sort of exit plan, hold the 18, and then hopefully they double. Pay
the debt down, and then have the rest as just pure cash flow coming through. Is that the idea?
I mean, there's plenty of options, and that's certainly one of them. So if if the whole portfolio is nearly 10 million at the moment, at a point in time that will double. It might be, I don't think it'll be the 7 years that's been spoken about, but it might be 10, it might be 12, even if it's 15 years. I'm satisfied with that, and the 10 million becomes 20 million, and at the same time I'm starting to pay down debt. So my debt position, which is currently $5 million, I see that coming down to 3, and you can realise a gain of up to $17 million.
Yeah, absolutely. So look, managing one property could be stressful and time consuming for some people. How do you go about managing a portfolio of 18? How much of your time is that sort of soaked up?
It's a really good question, and I think it comes down to having set processes. You're right. You have 18 properties, things go wrong. Yeah. Tenants leave, ovens break down, taps leak.
So is that every other week you feel as though you've got something you've got to do, or?
Yeah, it comes in waves. You might get nothing for a month or so, and then it feels like things come crashing down, and you're purchasing a hot water system, an oven, managing a couple of vacancies. But that's all part of the plan, and I have contingencies built into my monthly budget.
I was going to say, from that perspective, it's not a case of refinancing any of the properties to sort of get through those harder times, or again, where obviously you're getting smashed on sort of cash flow. So you've got a contingency where X amount goes into a different account, and that's just sat there ready for those days coming along.
Absolutely, yeah.
Okay.
Some months I spend more than that, others it's under, but it's fairly consistent.
And you manage the whole portfolio yourself, you and your wife?
Oh, absolutely not. So I use property managers for all of the properties. Okay. Yeah.
And just broadly speaking, sort of, would you say all property managers are equal in terms of their service and what they deliver and
It sounds like a loaded question.
No, it's 18. I mean, you've got such a wide experience of dealing with property managers now, and I guess maybe it was a loaded question, because my follow-up question was going to be, what would you look for in a good property manager if to look after your house?
Yeah, absolutely. So they're certainly not all equal is the short answer to your question. And often there's a relationship between the commission rate that you're paying and the service that you're getting. So okay. I make a strong point of not negotiating the rate down so hard that you sacrifice the service. So I'm willing to pay a little bit more to get better service. I think the good property managers are really strong on communication. They're really strong on the local market. Yeah. They managing the lease agreements well to really minimise vacancy and at the same time maximise your rent. But to your point, it is quite difficult to find good property managers, and unfortunately, I've had to move some on because my standards are quite high, and they need to be quite high because of the size and scale of the portfolio.
That's interesting. It's good to know. What's your sort of current mindset in terms of 18 properties? Are you looking to add over the next sort of year, 2 years, 3 years? When do you stop and go, that's me done? And where's your mindset there?
I think I'm there now. I don't see a need to $10 million ballpark of resi property. I don't see a need to add to that. Yeah. I've hit the targets that I set myself. So now I'm in the hold period and reduced debt, which it's not as exciting as buying properties. Yeah, right. But
if something got put in front of you that sort of your eyes lit up, would you go again though?
I never say never. I think down the track, in a few years' time, I would look to maybe reshape the portfolio. If there's some that aren't performing, as well as others, I may look to divest those and redeploy funds into some other opportunities. So, yeah, I absolutely see myself doing something. But for the moment, I'm pretty satisfied with. With where it's at. I think, good property investing can be actually quite boring. So, the magic happens over time with growth. So I'm in that kind of waiting.
Absolutely. Yeah. I suppose it's interesting you say that. I mean, given the current sort of market conditions and sort of prices softening and what have you, a lot of different investors I've spoken to see sort of over the next sort of 12 months as a real big opportunity to go, you know what, I can get in at a reduced rate and, start building my own portfolio as well. So yeah, it's that kind of interesting that you go, you know what, you've just got to put it to the side. But if the right one comes up, you never say never.
Absolutely. So you're looking at the Sydney market at the moment. Now, I haven't had an interest in Sydney for, since I last purchased in 2013, but it's now I'm starting to look at advertised properties, and my eyes are starting to go, have a second look and go, that actually looks like a decent opportunity. So yeah, there's a little bit of interest there.
Excellent. Mate, just one of the things I wanted to sort of touch on, you're currently working with a fast-moving consumer goods business, and then looking to move into, sort of, I guess, the skills that you've built up over the last 18 years buying property to really sort of drive and launch your own buyer's agent as well. And then on top of that, I mean, look, you've got all this time managing your property. You're obviously working at the moment. You're looking at setting up a new business, or in the process of setting up a new business. And then also as well, you're on the national board of directors for the Property Investors Council of Australia as well. How do you fit all of this in?
It's a great question. There's an old saying: it's if you want something done, you give it to a busy person. So I think that's there's a lot in that.
Yeah, right.
Yeah.
So talk me through, just for my own benefit and listeners out there as well, Property Investors Council of Australia, what does that, and what's your role, how does that look, and what does the business do?
Yeah, sure. So PICA is a not-for-profit organisation, so we're run by property investors for property investors. So there's 2 million property investors in Australia, and we're looking to serve them in two really clear ways. One is advocating and lobbying to ensure investors get a fair go. And the second piece is all around educating our members on the risks and benefits of property so they can make smart, informed decisions.
Okay, and is it a new entity?
Relatively speaking, we're about a year old. So,
okay.
Yeah, absolutely. So, and when you think about if you just flesh out that lobbying piece, there's a lot going on at the moment.
Yeah,
so,
absolutely.
Yeah, there's the property investors kind of been beaten up of late. So if you think about the government-made changes to depreciation, there's a mainstream media blaming property investors for inflated prices.
Yeah.
The banks are charging property investor higher interest rates. We've had the whole APRA piece. There's tenancy reform changes happening around the nation as we speak. And then you've got the Labor Party looking at some serious tax reform if they're elected in the election. So there's a lot going on in
this space. An important role to play.
Absolutely. And yeah, there's a big opportunity for an organisation like PICA to represent the needs and interests of the 2 million property investors in Australia.
Okay, and then how do I find out more if I wanted to jump on the website? What's the...
Absolutely. So pica.asn.au. And what we're really after now is members. So to your point, we're quite a new organisation. We have 2,000 members, which is great. Yep. But we're looking to very quickly take that to 10,000 members. And with size and scale, we'll have better cut through, which will get us a seat at the table with the policymakers to be able to have a balanced argument. So PICA is not against review of policy or changes. We're just after a fair go.
Mate, sounds good. Sounds like there's never going to be a quiet day in your diary. Grant, mate, thank you for coming on. We'll get you back for sure. Like I said, there's a whole bunch of different areas within your portfolio I'd like to explore more. But look, for today, mate, thank you very much. Appreciate your time.
Thanks, Russ.
No worries. Guys, thanks for joining us today. Make sure you check out all of our other podcasts. There's hundreds of them on the store, all jam-packed with great insights, tips and strategies designed to help you on your investment journey. So stay ahead of the pack. Make sure you also follow us on the usual social media channels, Facebook, LinkedIn and Twitter. And if you've got any questions or any feedback, please get in touch at editor@smartpropertyinvestment.com.au. Hope you've enjoyed the show. My name's Russel Stephenson, and I'll see you next time.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.